Hello guys, in today's video I will give you my top 5 dividend stocks for my long-term portfolio. So if you want to hear about 5 quality dividend stocks, continue to watch this video. So let's start. First one, MPW, Medical Property Trust. This is a REIT. It's a recent position of mine. This is a REIT with a long history of paying dividends to the shareholders. It is it's a well-known REIT. I started a position 2 months ago, I believe. I do not thought that I will have an opportunity to buy this stock, but there are a lot of fear and risk around the stocks. That's because one of their major tenants are having some kind of problems and they might not renew some contracts. So there are a lot of fear, a lot of risk. They have a really high yield. At the moment, it's around 14%, which is really high, and I do like it. They are still paying dividend. That they might cut their dividend if the fear around this stock and it comes through. If the fear that a major tenant can not renew a contract, if that happens, we might see a dividend cut for this REIT. That's the risk. But this is a REIT with a long history. I do like the stock. There are some risks, but I'm betting that won't happen and the stock will recover. This stock hit a high of around $25 and now is trading around $88. So we are seeing a major discount. So they are trading at for a REIT. What we like, they are trading at a price to book under 0.6. They have manageable debt. They are paying a huge dividend, and that's things we like. That's why I own this REIT, and that might be a good opportunity that we have here, especially if they can continue with their major tenants. So that's my top 5. So in fourth place, 3M. I do really like 3M. It's a conglomerate. They produce a lot of products. It's really probable that you have a 3M product close to you, on your house, in your room. They are everywhere, and this is a really old company. They have a history of paying dividends for a long time. They are a dividend aristocrat and inside the S&P 500. Now they are having some troubles, a process. That's why they are trading at a cheap valuation. Bear in mind they were trading around 250, 206 around the 2018. Most of the time they were trading above the 200 mark, and now they are trading around 100. And last Friday, the company have good news. They settled for the process. So and the stock were up 6% or 7%. Bear in mind, the stock were trading around the $93 mark, $93, $94 in the last Thursday, which is really good. It's really difficult to see a company with this quality trading around their fair value. For me, my intrinsic value for the company were around $92, being really conservative. I do own this company. I started buying it around the 100 mark, and now they are trading around 102. But it's a high quality company. I would like to increase my position, and I will look into it in the future. So they have really good margins. They have a wide moat. They are trading around forward P around 10, 11. They have a dividend yield almost 6%, with a payout around 6%, which means this is a healthy dividend, and if they have no troubles, they can pay and continue to increase their dividends. It's all check marks for on the things we like to see in the company. The revenue growth is growing slowly. They are a huge company. It's really difficult to grow their revenue, but they are growing. They have really good margins. They have a really manageable debt. They have high return on equity and in invested capital, which is what we want to see. They have a wide moat. They have been free cash flow positive for ages. They are returning capital to the dividend to the shareholders. They are doing their dividend and they do some buybacks. And I hope they do buybacks now, since their valuation is really low at the moment. So I would like to increase my position. I hope the stock doesn't go anywhere because I want to buy more, and this is a really good company. So next, Bank of America. I do not like banks. Banks are really difficult to analyze. I don't understand a lot, but I do really like Bank of America. This is one of the best well-known banks in America. I do like their CEO and their management. Brian Moynihan, it's really good. I thought I would never have the opportunity to buy Bank of America with a price to book under 1. At the moment it's 0.9, which is under their mean in the last 5 years. So every time we see a bank like Bank of America trading with a price to book under 1, it's really good. They have a really healthy dividend of 3% with a payout around 26%, which is really good. They can sustain their dividend for easily. They can sustain that easily. They have good margin, return on the equity good, but that's not important in a bank. They are trading at a price to free cash flow around 10, which means a yield around 10%, which is really good. One of the best banks out there after JP Morgan, but JP Morgan is trading with a really high premium, which I don't want to invest at that valuation. And Bank of America, I do believe their fair value is around 29.30, being really conservative. Every time we see Bank of America trading with a price to book under 1, it's a really good opportunity because they usually trades around 1.2, 1.5. So yeah, I do believe that we have a discount here. They were trading around $50. Now they are trading under 30, which is a really good opportunity in my opinion. So it's one of my key positions. With this bank crisis we were having in the last months, it turns to be a really good opportunity to increase our position in the financial sector, and I took that opportunity, and one of the companies I bought was Bank of America. That's nothing to add here. So next company, Qualcomm. Qualcomm is a really good company. I do really like because they are trading around fair value, slightly above now, but I had the opportunity to buy Qualcomm under $110, which is around my fair value. They have a quality score of 86. This is new on our platform. I developed a score which tracks our pillars, what we like to see in a company, and gives the company a score. And this is really good. It's a really good company, a lot of quality in this stock. We like their valuation. It's a really good valuation for a semiconductor. They have been growing a lot. Their margins are really good. Their balance sheet is really good as well. They have a return on invested capital and on equity really high. They have a really wide moat. They have been free cash flow positive, very fair, shareholder friendly. They are returning capital, doing a lot of buybacks, and paying a dividend, a healthy dividend around 2.8%, a payout under 50%, which is what we really like to see in a company paying dividends. So really high quality company trading around a fair valuation, in our opinion, and doing a really healthy dividend. So, and for our top one dividend stock, it is a company I really like. It's T. Rowe Price. I really love T. Rowe Price, and I will tell you why. This is a company they are always increasing their assets. It's a really good company, high quality, best management in town. It is a company, it's not going anywhere in the future. I do want to own this stock for the next 10-20 years, as long as I believe in the company. They're in America, Americans doing their 401ks. It's money entering every month, every week. They are always increasing. Americans are investing. They have to invest in their pensions, so their revenues in the future will increase. It's the quality of their revenues is really high, in my opinion. So they have really good margins. They were trading above the 200 mark. Now they are trading at a huge discount. The stock is trading around 110. On our discounted discounted cash flow analysis for the next 10 years, we came with doing a conservative analysis. I came with my intrinsic value is around $122-$123. So every time I see the stock under 110, it's a really good company, especially with a company with this high quality. They are growing at a steady pace, around 6% per year. They have really high margins. They have no debt, zero debt. They have return on invested capital and on equity really high, around 15 and 21% for the return on invested capital, which is really good, especially when we are talking about a company in the financial sector. This is really difficult, which comes, if T. Rowe can do that, it is a really good sign. They have a wide moat. Their management is really good, which I do really like, and they have in free cash flow positive. They are returning capital to the shareholders. They are doing a healthy dividend, around 4.4%. I hope they do more buybacks in the future, since we have been trading at a lower valuation for this company, in our opinion. So I would like to see the management do a lot of buybacks in addition to their dividend, which is a really good thing on our company. So this is my favorite dividend stock, T. Rowe. It's one of my key positions. With all these 5 stocks we have talked in this video, I hope their price comes down or stay at the same, because they are trading around fair valuation, and at the moment I do believe there are quality in this investment. They are value investments at the moment. I can see value in this. They are good companies, and there are companies I want to hold in my long-term portfolio for the long time. So I hope you like the video. I hope you like the stock and find it useful, and if you like, please subscribe, guys. Bye.